The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We start the show with the DAX across the pond, the German S&P. As you can see, we had a big ABCD formation that we've been watching for quite some time. If we take a look at this and scale down to a 15-minute chart, you can see that we did go up and make that 1.618 expansion at 11,448. And then we backed off about 50 points from that. It's very small, but this is a 15-minute chart, so we want to keep a good eye on this to see what's going on here with the DAX. One of the questions that someone's asked me, it's about the way that we try to look at some of these things intraday. One of the things that we were looking at last night, of course, on this 4-hour chart that I'm going to show you now, which is the euro. Everybody, we broken below that 104 level, and when we did that, we did make a butterfly pattern. It was a very symmetrical one. We had a 1.27 expansion to the downside. We also had the AB CD pattern. We've only been able to rally about 100 pips, but that's still a considerable amount. Whether that's going to be a high or not, certainly you really don't know whether that's going to be is going to be important or not. If we do look at the dollar index, however, and we're going to also be looking at gold too, but if you look at the dollar index here, you can see that 1.27 number up there at 103.75. That was the overnight high when that euro made that number right below 104. So that could be a spot for a some type of a correction here in the dollar, because we've had a pretty good run in it for quite some time. Hold on, what is this? We got a call. Come just a minute. Hello? Oh, hello, Santa. How are you? Folks, we've got Santa Claus on the line. Yes, sir. Yes, sir. Well, thank you very much. I'll be sure to pass that along to all our listeners here at TFNN. Thanks a lot, Santa, and happy Christmas and a happy New Year. There he goes, off the top of the roof of our house, covered with snow here in Tucson. Yes, folks, medication does work, for heaven's sakes. Anyway, here's what Santa has for us today, folks. Let's just take a look. And he said, be sure to be careful when you're opening the presents, because many times the presents have surprises in them that you might not like. So the first one we're going to look at here is this present right here. This is the long-term chart. We're going to look at a couple of long-term ones here going back a year or more, because these are big-time patterns, and this is what pattern recognition and cycles and everything. This is a Treasury bond. You can see we hit the spot-on 61% retracement yesterday at just a tad below that 47 level, or right at the 47 level. The low was 147.04. We've rallied about 2 points from that time. But let's just take a look at this complex as we go through and to watch some of it, because it has some very, very interesting things, to look at. First of all, when the notes and bonds were making that new low, I want you to see the difference between what was happening here. No, folks, that was not really Santa Claus. That was me. I was pretending. Anyway, if you look at the four-hour chart on the notes, we made a double bottom in the Treasury bonds, where we made a slightly lower low right at that 1.6618 level on the long-term weeklies. But look how the short-term rates have absolutely collapsed. They took out the lows from forever. And, the bonds have still held up relatively well on a short-term basis. But we have to take a look at this from even a longer-term time frame. And if we do that, we're going to take a look. First of all, I want to do the utilities after this, but I wanted to give you an idea of what's happening with the long-term picture in the notes, because this is one that looks really interesting if you like numbers, and you will look at some cycles too. But if we'll take a look at the number here, you'll notice that we're at a 61% retracement of the low of 2009. You know, that was right after, that was the low of the market, folks, that 2009 low, because that was that March 5th low that had, you know, everything going for it for stocks to go up. But at this particular one on the notes that you're looking at, it's making a perfect 61% retracement from the low in 2009. And it's making a 382 retracement from the low in 2007. So we have several things here. And if you look at it really closely, you can see that we've completed an ABCD pattern from 2012 to 2016. So this looks very, very interesting as you look at some of these things as we go through them. Now, we want to look at a couple other things that I think will also be important to look at. And one of them is going to be, if we take a look at the TLT, and what we'll do is we'll just add some simple, hold on one second here. It's not going to be as simple as I thought. Yes, it is. Hold on. And if we put this right here, you'll see that we have some really nice cycles forming. That's a 368-day cycle that ends this week. And of course, as you can see, the TLT has also made a 61% retracement of the low from 2014 in January 2 years ago. So that's an interesting one. So we're just looking at different things, how it's all coming together at the same time. Whether it means anything or not, you know, we really don't know, but we want to keep an eye on some of these things because they certainly look like they have a great deal of things that could be interesting. Now, if we take a look at the Dow Jones Utility Index, which is, you know, linked to the hip with the interest rate markets, you'll notice that we made that 61% retracement in the Dow Jones Utilities, and we had a beautiful ABCD rally over these last few weeks. You can see that we backed off a little bit. So if we go to a little bit shorter time frame here and look at the Dow Jones Utilities over a 4-hour chart, what you're going to be looking at is you're going to be looking at that pattern that we like to see, which is known as the 135 pattern, and that will come in come in on Wednesday if it's perfectly symmetrical. We don't know whether it will be or not, but that's one of the things that you might want to keep in mind if you're looking at the interest rate scenario. But we have hit every major cycle and every major price that we can see from a long-term basis and a short-term basis. Plus, we've seen the 3-drive pattern that we've seen here in the notes and also in the bonds. So there's going to be an interesting, and believe me, just because rates have been increased by the Federal Reserve, you know, they've been behind the curve for so long that it's really it's really, really hard to make a bullish case for this, but that's what it looks like, you know, as we watch some of these things. They're just, flat out, spot on, right numbered. I mean, that's just what you like to see as you go through some of these things. But as the caveat says, and we'll take a look at this last little chart here, which is the notes. Anybody looking at this chart would certainly not want to buy notes. You'll notice the blue line here, the dark blue line, is the 30-year Treasury bond. And you can see it's much, much stronger than we are in the shorter term rates. So that's what we're watching. 877-927-6648. Stay tuned for Rudolph. He's got a few words of wisdom for us.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at this long-term weekly chart in gold. I know you're probably tired of seeing it, but we came within $5 of the exact low in the at the 786 level. In gold yesterday. Whether this is going to be that number or not, we'll have to wait and see. However, we do have an important announcement, and that is that Mercury goes into retrograde motion in the sign of Capricorn. This comes from our good friend Norm Winsky, who, gave us a sell signal on Monday in the Dow, which had its first correction since Hector was a pup, and he's now 19 years old. So this market has just refused to go down, but we did back off a little bit. We've come back to about 70% of that rally, but we'll see if that's going to be the case. But Norm hit some really nice spots in December for us. He did want us to alert us to the fact that we do have this particular event going on. And remember, back in May in 2015, we had Mercury was going retrograde, and also we had a new moon at the same time. Well, we had the new moon this week, which was on the 13th, and today we have Mercury going retrograde. And remember, retrograde motion in Mercury is supposed to play havoc with communications. You're not supposed to sign any major contracts or anything like that. We'll see if that's going to be the case. But keep an eye on it. Remember, Mercury is one of the planets that was on these clay tablets that the Sumerians used to predict wheat prices 7,000 years ago. This was in Andrew Lowe's book from MIT when he talked about the astrologers being the first technicians, and they used Mercury and the moon when they were looking at predicting prices for wheat and other things. And so it must mean something. I don't know. We watch it as a cycle because it's an 88-day cycle. And this one, Mercury goes retrograde around 4 times a year. And that's usually the same thing that we see. Well, we do have some, price changes, but the lunar thing is the one that usually triggers it. So we'll see if this is going to be, something really dramatic or not. But right now, this is what we're watching here. Now, let's take a quick look here as we take a look here at this next chart, which is the shorter term chart of the gold market. Last night, and this is one of the things we do when we're trading. You're looking at a 15-minute chart, and gold is really a great thing to trade because the stops are usually honored very, very closely, even in the middle of the night, unless there's something ridiculous happening, which in these markets you can certainly understand that can happen. But you'll notice that it made a perfect ABCD pattern at an exact 61% retracement of the high from December the 15th. And that was, hold on one second. Excuse me. Santa left the chimney open when he left, and he's a little draft coming in. Anyway, it made that retracement up here at this 1138 level. Now, if you're looking at on the gold on the short-term time frame, what you'll be watching for is for the watch the market to make the similar type move that it made in its last correction, which happened to be about $7. That would take us down to the 1131 level. Now, if gold can hold that 1131 per ounce, then it's got a chance here to make another move up. However, if you look at it from a perspective that we might go down and make that 78% retracement on the weekly, if you take that distance between 1124 to 1138, which is $14, and you multiply that times 1.27, it's going to hit dead spot on to 1117, and that's the 78% retracement of the gold market going back from December of last year, folks. When we were at 1030, we had that big three drive to a bottom pattern on the weekly. We rallied $300 an ounce, and now we're back retracing 78% of that, and the whole world is bearish now, and mainly because the U.S. dollar is going so wacko. So this should be an interesting day in gold just because of the Mercury retrograde, along with the fact that we do have these numbers that are starting to pop up that look very, very interesting. Silver is also weakening up for the first time, and we'll see if that's going to be much of a case or not. We'll watch that as we go through some of these things. I do want to cover something for some of our friends across the pond over in Hong Kong. They've been concerned about their market because it's been falling very precipitously when the rest of the markets in the world are going up. But Asia and China have not, well, Hong Kong and China have not been doing too well. But if you look at this Hang Seng market over the last 6 months, you can see that we've been in a really strong downtrend ever since September the 6th. And we did make that 61% retracement back in late November, touched it again in December. But that's not the key chart to look at when you're looking at the Hang Seng. If you would take a look at the Hang Seng on a much larger scale, considering what's happened here is what's going on. There is very little correlation between the Hang Seng. I should say that with a little bit of trepidation. There could be. I don't know if this is the case or not. I'll have to double check that correlation to see if there's anything there, but no one's ever asked me that question because they use the Hong Kong dollar that is pegged to the U.S. dollar at 7.75, so the yen doesn't have a whole lot of things. They do have a lot of Japanese tourists coming in, but I don't think it makes that much difference. What we're looking at here is if we look at this long-term chart here in the Hang Seng here, we'll see what's going to, hold on one second, please. We will look at the Hang Seng here over the past couple of years. You'll notice it made a perfect head and shoulders pattern. Folks, this is a definition of a perfect head and shoulders pattern. If you know the left shoulder and the right shoulder are exactly equal, they're equal in time. In other words, from the shoulder to the head and the head to the shoulder is equal in time. You'll notice that the right shoulder is exactly a Gartley pattern at 0.618. That was when it was trading at 24,000. We're breaking below 22,000 now, and that's going to take us down to probably the 20,000 level, another 10% lower before any really serious support comes in. That's what it looks like here with this Hang Seng. So it's got a lot of negative things going on with it. By the way, when we're speaking of Japan for just a moment, Japan overtook China in October. They are now the #1 holder of our treasury bonds. They got that by default because China sold $1 trillion worth of their bonds, and Japan bumped theirs up a little bit, but they took it over by default. So Japan is the one that's holding the big majority of our 30-year treasury bonds. So that's what we're looking at right here. Folks, I'm not looking for a new bull market in treasury bonds. I'm looking for a substantial rally. A substantial rally at 0.382 could easily take the bonds up 15 points. We went from 177 down to 147, that's 30 handles, and the 61% retracement on that back would be 12 handles. So you could easily get that much of a correction, and it's quite a bit. So we'll see if it's going to hold or not, but it's going to be interesting because we are over all of these cycles and all of these particular things that we're watching right now. So we'll be watching this, very, very closely. They're actually coming down. This is exactly what you want to see during this time of the morning. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look now at a request. Someone's had a request to talk to us about soybean oil. We're going to bring up the chart for March soybean oil. You'll notice here that we've been watching this. We had an ABCD pattern, way back in July. We happen to be buying some corn and some beans back in that area. We had this move up. You can see the structure of the pattern going up. We had a 3-drive pattern culminating up there. But look what's happened over the past 8 trading days, folks. This market has only been able to come down just a very, very small amount to the 382 retracement. Now, this has really bullish implications. Now, the good part about this is that you don't have to risk very much if you wanted to be going long soybean oil in this area, because if the market gets below this 36.60 level, this would tell us that you're most probably wrong. So this would be a risk of about $300 if you wanted to enter the trade looking at that. But if you stop and think that it took 8 days to make only making a 382 retracement, that's usually a very, very bullish sign. And even though we've had patterns that have completed up there, this could be another pattern going higher, which could take you up to the $40 per pound level in oil. Now, oil is the one when they crush a bean, they get 80% of it is the meal, and the other 20% is the oil, and then there's some residual that they use for cattle feeding and other stuff. But that's mainly it's the meal in the soybeans that make it thing go. But when you have a problem like they have in India with these droughts that they've been having, that makes the palm oil and some of these other oils go crazy, and then the soybean oil follows along as you go. Now, we've had a request to take a look at the price of silver going back into last year's low. Just give me 1 second here. It will only take me a minute to, this is really setting up nice. We're getting very, very close now to this 1131 level in the gold. Watch this very closely, folks, because this could be a really interesting spot in the gold market if we believe that this low that we made at 1124 yesterday is going to be the correct low. And this is a big guess because we're basing this primarily on the 78% retracement and also the fact that we are over some pretty strong cycle stuff, which includes the information on the Mercury going retrograde, and that means you usually make a bad decision. Now, I'm going to put up this daily silver chart, but you have to pay close attention to the far right of this chart because that's where you're going to see the last expansions that have happened since the early December, late November, early December. You'll notice that the market rallied from $16 an ounce all the way up to $17.30. They rallied $1.30, and then with the yesterday's action, you'll see the market has broken down. We're almost at the 1.27 expansion of that, which would take you to 1587, another 20 cents lower. Now, slightly below that, you're going to see that red box, and that's that 1.618 expansion of that whole move, and that also happens to be the exact 78% retracement of the low that we made back in December when we made the big 3 drive to a pattern, and we had this big move that went up. Folks, we have not been. We've tried the bullish side of gold and silver twice during this past run up. Both times they were profitable trades, but they didn't stay into a bull market very long, so you had to get out of it. I mean, that's just all you can do. If you'll notice this silver chart, ever since June, we had those that 1-3-5 pattern. We have perfect symmetry between 1, 3, and 5. All the ratios were there. It was telling you that this market was in some kind of trouble, but now we have to look at it possibly from the other side. And I use this word possibly with a little bit of tongue-in-cheek, much like we did with Mr. Claus earlier today. But it could hold and it could not. It held the 61% retracement for a while, but then, in fact, it gave up the ghost, and we'll see what's happened. But keep an eye on this 1131 in the gold market because that's the one that will be. Let's just do this really quickly so you'll be able to see. Since I'm on this right now, it doesn't take me very long to do this. All I have to do is draw the retracement in, and you'll be able to see it. And all I have to do now is to put it into the room, and that's bada bing, bada boom, and we'll get this in here very, very quickly. And I think this should do it. Yep, this ought to do it. Nope, I don't think that will do it. Okay, here's the chart that we were looking at before. So we can walk through this so everybody will see this is going to be happening. Now all we have to do is to go over and find it right here, and there it is. So all we have to do now is to put it in here for Danny, and Danny will be a happy camper. And we're always happy to see Danny. Now you'll notice that so far all we've done now is backed off to a 38% retracement off of the low that we made back yesterday at the 1124 level. And we are still expecting we could get this market down to the 1132 level, and that's it. But if this is all we get, and we now take out the high, then gold could have one heck of a short covering rally. So if you have to buy stop it above 1139, you only have to risk $6, because if it goes back below 1133 again, you don't want to be standing in front of that one. So just keep that in mind as you're watching these. Now, I wanted to share a chart with you from my good friend Jim Flanagan from the GAN Educators, because Jim is in a very unusual situation, because he believes that we are getting ready to start a major bull market in commodities. And here's his chart. This is from the GAN Educators, Jim Flanagan out of Santa Monica, California. You'll notice what he's showing here are the major corrections that we've had in bear markets in commodities since 1792. And look at them. They're all 78%, 69%, 80%, 75%. The one in 1968 was only 31%, and the one in 1998 was only 50%. But the one we just finished, and that's what his assumption is, that we just finished it, was 70%. So we could be looking at a potential bull market. Now, with our new president-elect coming in, maybe he's going to be stimulating the economy to the tune that we'll be able to see these things have one heck of a rally. Now, if that usually occurs, the U.S. dollar would most probably weaken a little bit from here. That's theoretically what it does, but this is theory, and we're trying to deal in practicality and see if it's going to make a difference. But we'll watch it very, very closely, because we've had one heck of a move in copper. It's given some of it back right now, but that's just normal. We're just back. We went from 230 to 275, or well, actually 210 to 275, and then we backed off a little bit to the 382 retracement. So those are the things that we want to keep in mind. Someone's asked a question about this Mercury cycle. Folks, all I know that Mercury is such an important planet for timing purposes, because George Baer, who was one of the great traders of the 30s, he used the speed of Mercury as one of his leading indicators. Jim Twentyman has done a lot of work with this, and Shane Smullian has done a great deal of work with it, and it does have some really great application. But as always, it's probability. It's never certainty. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to be taking a look here at the German bond. We've had a request from Florida to take a look at this bond. As you can see, we made a three-drive pattern in the bond. Actually, that's a butterfly because we had the middle leg is just a little bit higher than the X part of the ABCD move, and it hit it perfectly. The ABCD was perfect. The 1.27 was perfect. It has a very good rally, just like we did in bonds. We had a 2-point rally in bonds, so we should watch this very closely. Now, the one thing that I would be doing today, and I will be doing it, is taking a look here at this bond market because we've had a two-handle rally, which is $2,000, and we're having tremendous volatility in this contract. So the thing that you would be watching is to see that if it's going to make a 61% retracement or a 78% retracement. Well, we just touched the 61% retracement at 147.30. But because this market has been in such a downtrend, I'm going to give it a little bit of time here and see if we can get it down to the 78% retracement, down about another 20 pips, which would be down around the 147.20 level. So that's what I'll be watching. We're right at the 61% retracement right now. And this is also, I think, a good buying opportunity. But what I would suggest is because of the strength of this move we've had down from, we've dropped well over 1.5 points here just in the last couple of hours. So give it a little bit of time in here. If you have to pay up for it, then you have to pay up for it. But right now, I would just give it just a little bit more time, about a half hour. And if you're not going lower at that time, then I would buy it, and I'd put your stop below the 140. Right below 147.10. So your risk on this would be just about $300 a trade, and the profit potential on it, if it's an ABCD structure, would take you to 150. So it's 3 to 1. It would be 4 to 1 profit reward risk to reward level. Folks, the one thing that we know for sure here, and that's the only thing we know for sure, is what's happened to this stock market. The whole world has been short bonds and long stocks. I mean, well, not the whole world, but, almost the whole world. And if we take a look at what's happened to this New York Stock Exchange Index, we did make the big ABCD pattern. We hit it just spot on, almost exact. We missed the exact 1.618 on this index by only 5 points, and that's with a handle of 11,100 and change. So that's pretty close. So, but the ABCD pattern is there. And if you look at the time frame between the July and September, it's very July, August, September. What have we done? November, December, 2 months. We've also had this tremendous rally known as the pump bump. Boy, heaven help us if the stock market ever sells off. They're going to blame the president-elect for that, along with everything else. And then we'll have to see if how that's going to be handled. But we'll see what's going on as we go through some of these other charts. If we take a look here at the New York, let's get our game plan back together here, Larry. This is not the New York Stock Exchange. This is the very good, Mr. Bill. Yep, that's always have. Well, the good thing here is we have Mr. Winsky on the line all the time. So anytime we have a problem, we can always, get on his case. Anyway, if you want to get Norm's letter, which is his hits for November were terrific, and so far his Decembers are doing good, but you can reach him at Astro Trend. That's his website, and his phone number, oh dear, I think it's 239, can't remember it. I'll have to, maybe he's listening and he'll tell us what it is, and I'll type it in. I had it in my memory bank, but as the old gray matter slips away, we don't always get it. So we'll see what's going on. But this is a Mercury retrograde, and it is going into Capricorn, so that it'll be seeing whether it's going to be a interesting time for some of these things to be watched very, very closely. But most of it is related to the U.S. dollar, folks. And if we look at this Euro chart, we're still 100 points from where we were last Sunday. Let's just pull this up so you can take a look at it. Last Sunday, we were trading at 105.57. We broke the 105 level and we broke the 104 level. We've rallied back into that 104.50 level, but the longer-term chart on this Euro still says that we could be heading towards par without any trouble at all. So that's the key factor in this. By the way, thank you, Danny. This is quadruple witching hour, where everything expires. I think some of them expire on the open, the other expires at the end of the day. The thing that this doesn't have the same impetus that it used to have, because people get to be expecting it and they start working out of these before the last day. But years ago, quadruple witching and triple witching were always really crazy days, but now it's not the same. But we do have Mercury going retrograde, which makes it crazy enough. So those are another factor that we should keep in mind as we look at some of these things. Let's go to our crude oil here a little bit, because we've stabilized here at this level we were looking at, and we've gotten above this $51 a barrel level here. We went down and made the 78% retracement of those lows from the last few days. That false breakout, that was some people really got hammered on that one. Fortunately, we were looking at that as a potential because of the fact that it stayed there for Sunday night. It stayed there for, well over 6 hours, and then started to give up. And if it was really a good market, it wouldn't have gone below 53.40, as you can see by that arrow that we pointed out to you folks, that it should not get below that. Because if you stop and think, Sunday night and then early Monday morning when we began our trading, that meant that everybody that bought it Sunday afternoon, New York time, which would have been around 5 o'clock, everybody bought it from Sunday night, 5 o'clock, until Monday morning, that 20 hours. All those people now had a loss. So if they're not aware of what a false breakout could be, then you want to be able to at least pay attention to that. The first key was that it stopped exactly at the 1.618 expansion of the highs from 4 days ago, to the exact tick at 54.55. I mean, that's you can't get any closer than that. So keep an eye on these things, because when it was 54.35, not 54.55. Anyway, we'll watch this to see how much of a rally we're going to get. The last rally we had of any substance took us up $1.70, and we're almost at that right now. So if we can get the crude above $52, that's telling us that there's a potential that this thing has more to go to the upside. Yes, I am aware that Goldman Sachs has raised their price target on oil from $55 a barrel from 2017. They've raised it to $57.50 a barrel, $2.50. Wow, that's a big prediction. That's a 4% jump. Anyway, we'll see. We'll see what happens with it. But anyway, these are all predictions, folks, just like mine and everybody else on the show. You have to make up your decision on whether you think these numbers are good. All we're doing is we're looking at patterns, we're looking at ratios, and that's all we're trying to see when we're looking at some of these things. That's really what we're trying to look at. So keep in mind that that's what it's all about, and that's all I can tell you. All I suggest you do is to look very, very closely at the Treasury bonds and look very, very closely at the gold market. Those are the ones that Santa said that he liked the best. Who loves you, baby? Keep every day in an attitude of gratitude, and may God bless, and we'll see you all Christmas week. Have a wonderful holiday, and do something for the poor and especially the veterans. Off the soapbox, over and out.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. This is Mr. Valentine here. He had the time off. I looked up at the old clock on the wall that now needs batteries, and I thought that the time was up, but we do have one more segment. I wanted to bring this chart of the Treasury bonds up here because I really do like this trade, folks. It's also a head and shoulders pattern. And it has got that big move on the dailies and weeklies. And the fact that we took out the old low, if you look at that December 15th low, we took out the low from way back about a year ago. We only took that out by 3 pips. and it immediately rallied $2,000. Now it's backed off $1,000 right at the 61% retrace level. That's why, and now you have a really good play. Okay, I'm not going to play Santa again until next year, I promise. Now, the Easter Bunny, that's a totally different thing. We don't have any negotiation to do on that. We have to do the Easter Bunny show. However, let's get back to these bonds. This is a very low-risk entry. Profit potential could be immense because the whole world is the other way on this. So just keep in mind that these patterns fail a lot. Sometimes they work, sometimes they don't, usually in the area of around 65, 70%. But the profit to loss on these things are pretty good. And you'll be able to see if they're going to, work right away on these particular ones because there's no time left. I mean, we're right over the major cycle. We've hit the numbers. It's acting right as far as a technical basis, making slightly lower lows and then reversing. The news is out. The rates are going higher, but they've been going higher since July. That's nothing new. So we got to pay close attention, to that. So we want to watch it very, very closely. Next week, I will not be on the air on the 21st and 22nd. Well, I'll be back on the 23rd. I'll do the 19th, 20th, and the 23rd. But the 21st and 22nd is going to be with the family. We've got the grandchildren, hopefully, and we'll have to see them. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.